Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're diving into AXT Incorporated's second quarter results for 2025. And this one is a real head scratcher. The company's core business showed this massive positive turn, but the stock, it got absolutely hammered. So what's really going on here? Let's get into it.
Here's how we're going to break this down. First, we'll look at the numbers versus that wild market reaction. Then we'll talk about the great wall of permits that's holding things back. After that, we'll get to the good stuff, the AI silver lining that's driving huge demand. We'll also cover management's playbook for Q3. And finally, we'll wrap up with our take, what to watch for, and yep, a rating.
All right, let's jump right into the central puzzle of this quarter. On one hand, AXT put up numbers that really screamed turnaround. Key metrics were improving dramatically, but on the other hand, investors hit the sell button and they hit it hard. So the big question is, what did the market see that completely overshadowed all that operational progress? And this slide really captures that disconnect perfectly. You look on the left, you see this huge, sharp recovery in gross margins. That's a fantastic sign of improving business health. But then you look on the right, and you see the market's response, a nearly 8% drop on some pretty heavy volume. This is the contradiction we're here to solve today.
Okay, so looking at the headline numbers, they seem fine. Revenue hit the high end of what analysts were expecting. But the real story, and our first clue, was on the bottom line, a 2-cent miss on non-GAAP earnings per share. It might not sound like a lot, but it tells you the market was laser-focused on profitability.
But honestly, this right here is the most important positive signal from the entire quarter. Just look at this incredible swing in gross margin. They went from negative 6% in Q1 all the way to positive 8% in Q2. That is a massive, massive jump, and it's proof that management's efforts to fix their manufacturing are actually working. The core business is getting healthier, period.
And yet, this was the market's final verdict, down almost 8% in a single day. So despite that beautiful margin recovery, investors were clearly spooked by something else. And the reason why wasn't some tiny detail hidden in the financials. No, it was the main topic of conversation on the entire earnings call.
And here it is, the big one, the Great Wall of Permits. You see, the market's pessimism, that big stock drop, it really comes down to one major issue: Chinese export controls. The takeaway here is simple. AXT doesn't have a demand problem, not at all. It has a shipping problem.
Now, to be clear, this isn't a brand new problem, but it is an escalating one. China started requiring these export permits for gallium arsenide back in August of 2023. But then, just this year, they expanded those rules to include indium phosphide, which just happens to be AXT's key growth product. It's a bureaucratic bottleneck that's only getting tighter.
So what does this actually mean in dollars and cents? Well, it means the company is sitting on over $10 million in booked orders from customers who want their product that they simply cannot ship. It's all just waiting for permit approvals from the Chinese government. And get this, more than half of that backlog is for their highest value indium phosphide products. And hey, you don't have to take my word for it. The CEO himself, Dr. Morris Young, said it directly on the call. This permit friction wasn't some minor inconvenience. He said about half of their revenue miss was a direct result of these delays. That confirms it right there. The main thing holding back growth right now is not customer demand, it's paperwork. Okay, so while that permit issue is a major, major headwind, there's an equally powerful tailwind blowing in the exact opposite direction. And this is the secular growth story that really forms the entire long-term bull case for AXT, and that is, of course, artificial intelligence. Think about it. Data centers all over the world are in this massive upgrade cycle to support all these new AI workloads. They're moving from 800 gigabit optics to 1.6 terabit, and 3.2T is already on the horizon. Every single step up in speed requires higher performance, higher quality indium phosphide substrates, which is the exact specialty material that AXT makes.
And AXT isn't just some small player here, not by a long shot. Management claims they are one of the top 2 suppliers in the entire world, controlling an estimated 40% of the global market for these critical INP substrates. This puts them right in the middle as a key enabler of the whole AI hardware supply chain. And look, this AI trend isn't just some theory about the future. It's already hitting their income statement right now. Even with all the export headaches, the demand for their AI-related products inside China is just exploding. The revenue from these applications nearly doubled in Q2 alone. That shows you the incredible pull this market has.
So you've got this tug of war going on, right? Permit headwinds pulling one way, AI tailwinds pulling the other. So what's management's game plan for the next quarter? Let's take a look at their guidance and where they're focused. Their guidance for Q3 points to more recovery. They see revenue growing again sequentially, but maybe more importantly, they expect those gross margins to keep climbing, up into the low to mid-teens. The key takeaway here, management is signaling that they believe this turnaround is real and it's just getting started. And their focus for the near term is crystal clear. Priority number 1, no surprise, is navigating this permit situation. Priorities 2 and 3 are all about internal execution. Keep fixing those margins and bring down inventory. And priority number 4 is the big prize, capitalizing on that massive wave of demand coming from the AI build-out.
Okay, that brings us to our final segment, the next call. We've looked at the numbers, we've broken down the headwinds and the tailwinds. So here's our take on what this all means for the stock moving forward. So what should you be watching for on the next earnings call? We think it comes down to 4 things. First and foremost, the permits. How much of that $10 million plus backlog are they actually able to ship? Second, demand from that 1.6T optics cycle. Third, any updates on the IPO of their Chinese subsidiary, Tongmei. And fourth, the ultimate wildcard. Any change, any at all, in China's export policy.
So after weighing all of this, we are initiating our coverage with a reading of outperform on AXT. Our thesis here is pretty straightforward. We think the market is way too focused on the temporary permit problem and is completely missing the much, much bigger picture. Here's the bottom line. We see this export friction as a temporary overhang, not a permanent break in the business. The demand coming from AI for their indium phosphide is a powerful multi-year trend. We believe this massive tailwind will ultimately overpower the near-term geopolitical friction, allowing the company's revenue and margins to really re-accelerate once those permit flows normalize. So we'll leave you with this question to think about. With more than $10 million in backlog just waiting to be shipped, and a dominant position in a market that's set to explode thanks to the AI build-out, could AXT Inc. be a coiled spring? If and when that permit bottleneck finally clears, the release of all that pent-up revenue could be absolutely dramatic. And of course, as always, please remember, this analysis is for informational purposes only. It is not financial advice.